It is the gift that keeps on giving. The holiday edition of the CNBC All-America Economic Survey is out, and it is loaded with goodies about how much Americans plan to spend this Christmas season and where they plan to do that spending. Our senior economics reporter, Steve Leisman, joins us right now with the details. And Steve, do tell.
Yeah, Americans plan, Becky, to spend with gusto this holiday season, despite concerns about the economy, inflation, and worries whether they're going to get their gifts on time. The CNBC All-America Economic Survey finds that individuals on average plan to spend $1,004 on gifts. That's up 13% from the pandemic-depressed level last year and the highest number since 2018. It does, though, eclipse the 2019 level before the pandemic. Among the 800 Americans that we surveyed throughout the nation, 15% saying they plan to spend more this year. That's up from 11% in 2020. 35% plan to spend less. That's down from 39%. Now, among those who plan to spend more, here are the top reasons. They have more cash in their pockets. They have more people to buy for, but also because prices are higher. Higher prices and trouble paying bills. You can see that on the other side, a top reason for those saying they're going to spend less as well, along with views that the economy overall is in poor shape. Lower earnings and the desire to save also making the list. So the survey was conducted after news of the Omicron variant became pretty well public, and it still found Americans far less concerned than they were a year ago to go out in public, shop at malls and local stores, visit big cities, or fly on planes. That could explain why the percentage of Americans who say online is their top shopping destination fell to 50% from 55% a year ago. But you see there in the chart, it's still above the level before the pandemic. That may be some initial evidence that some of the move to online shopping during the pandemic could endure once this thing is over. Worries about supply bottlenecks, they crept into the survey. A quarter of the folks said they were concerned their gifts might not arrive on time, and 36% said, well, they shopped early to ensure Santa's presents arrived in a nick of time. Becky, this is the 15th annual holiday survey of the All-America Economic Survey.
I think you're right about some of the online gains from the pandemic sticking around as people realize it's just easier. And once you're set up and your information's logged in, it's 3 clicks and it shows up in a lot of different places that you can shop. Steve, I heard something this morning on Worldwide Exchange, and I've kind of been kicking it around. I'm glad you're here to talk about it. It's related, but only tangentially. They were talking about how the savings rate for Americans in October, according to the Federal Reserve, was 7.3%. I thought, that's actually pretty good. That's a relatively high number. But then they said, of course, that's down from the high during the height of the pandemic when it was a crazy 33%. I was just trying to figure out what's the optimal rate. What does the Fed consider to be the optimal rate? Because you want people to save and have some savings, but if they're saving too much, it means they're not spending and the economy goes to hell. So what's a good rate?
Nobody knows, Becky. I mean, we've had numbers. I can't remember. They readjusted the whole series, as I recall. It used to be down in the 4s and the 5s, and then I think 7 is an average or 6 is an average. It was way higher. It came down. Look, this is one of those things that it cuts both ways. Savings can come down because consumers are under stress and they're using their savings. They can also come down because people are optimistic about their earnings. So it's a little hard to tell what the optimal rate is. I always say that one shouldn't be so bold as to tell people what their optimal savings rate is. People come up with a number, and to the extent that they have the financial ability, they get to a level that works for them. And sometimes they're very secure about their earnings, and they're like, I don't need to have this money saved for a rainy day. Other times they're stressed, and they're bringing it down. The numbers in this survey on using debt to pay for Christmas gifts was not that high.
Good.
So it didn't speak to me of a lot of financial stress out there.